Time to move right on then, and we've got with us the Managing Director, Manimekhalai of Union Bank, the CEO as well, joining in to talk a little bit about their quarterly performance as well as outlook on deposit growth and return ratios. Good to have you on board. Thanks so much for joining in. To begin with, you've reported the highest ever net profit in around 30 quarters. What has really contributed to this?
Before I get into the profitability part of it, let me just briefly tell you on what we have achieved during the quarter and for the year as a whole. We have given a year-on-year growth in deposits to the tune of about 8.26% and credit growth at 13.05%. Consistently, we have been growing in these two areas. RAM has performed very well, 14.94% in the RAM sector. We have done profits to the tune of about 25,467 crores. That is what we have done. Our increase in profitability, that is net profit, is to the tune of almost 61.86%. If you remember, we had given ourselves two guidance in the beginning of the year that we will cross 90 trillion of businesses and at least 15% growth in our operating profit. And these two focus areas was there for us from the beginning of the year, and that is what has led to the healthy growth in the net interest income and in the fee-based income. If you look at my net interest income, it has grown by almost 21.2%, and even in my fee-based income, we have seen substantial growth. Fee-based income meaning out of my own books, like your third party, and we have a wonderful product for the CMS, that is the cash and the payment systems, where we have got a wonderful product, and through that we were being able to register a growth of almost 23%. Plus, the third most important part for us was, from the return of accounts or our asset quality, where we were able to recover substantially during the quarter from our NPS books, and we were able to recover quite a substantial number, almost like 5,500 crores we have recovered from our return of numbers, and during the quarter itself we did about 2,300 crores in our return of numbers, and that's the reason that we could show a very healthy growth. It is not just one parameter that we have been focusing during the whole year. We have been taking various measures to see that whatever we do, we are able to register good growth in all those numbers. Thank you.
Believe the advances growth rate will slow down from the current pace of 13%?
Well, we had given it, ourselves a guidance in the last year to about 10 to 12 to 14%, and then we have achieved our 13.05% of growth in the last year. And during the current year, we are hoping to, have an advances growth of 10 to 12%. And this is what the analysts have predicted, that this year the growth will be to the extent of 12 to 13%. In keeping with the market and the systems, we are hoping that we will also grow at 10 to 12%. To give you a small perspective, as on date, I still have about 35,000 of sanctions with me, and this will help me to generate further income. You have also seen that during the year we have created a lot of verticals. We look at the mid-corporate segment or the retail loan segment and the MSME loan points. We have created LCBs, 14 of them. We have also created something called the CRC, the corporate relationship cells, during the year. And all this, various verticals that we have created will propel us to achieve the targets that have been set up for the bank.
Do you believe that the stress with respect to asset quality is likely to rise further in next financial year?
Stress would be there. This is a normal course of business and the economy also. So stress would be there in various parameters, and we have seen the interest rate hike also substantially in the last 2 years, and this is also added to the stress. But I am sure that we will be able to manage the stress substantially. This year, the stress SMA 0, 1 and 2 books were limited to 0.62% of my total book. But I'm sure that for the current year also I will be able to give that kind of a guidance to ourselves. If you look at what we have done is most of our stress is looked at very seriously by the bank. We have got a 5-pronged approach right from the bank calling up the stressed borrower. So before even the account goes into the SMA zero position, the SMS goes to the customer. There is a call that goes from the branch. There's an RCOC, the regional call center calls him. There is a foot on street where the customers are visited by our people through my subsidiary. And the last but not the least, the call centers also help us in recovery. So with this five-pronged approach that the bank has taken, I'm sure the stress will be maintained, and I'm sure that we will be able to maintain at the same level at what we are having it at this year.
Right. So you've said that your NIMs will be maintained at 3%. Will you be able to maintain margins in high interest rate scenario, you think?
If you look at my book of 8.10 lakh loan book, out of that, almost 50% of my loan book is covered by an MCLR. And so this is to be repriced once in a year. So out of that, just about 50% of them have been repriced during the current year. And going forward, the remaining 50%, if you look at even in as of September alone, I've got about 41 to 50,000 crores of my loan book to be repriced during the year. So I'm not seeing any reduction in my margins. Plus, the deposits rates have also come down. What we have observed in March, about 40 to 50 bips has come down in the interest rate after the pause taken by the Reserve Bank of India. So we are hoping that the NIM will be at the same level, hoping to maintain the NIM at the 3% level.
Lastly, what's your guidance on ROA, ROE in the financial year, and by when do you think you're going to move towards an ROA of 1%?
Yeah, return on assets, we are hoping to, at least 25 is what we have given the date that it will be at 1. In the current financial, for the quarter, we were at 0.88, and for the year as a whole, we were at 0.69. We're just hoping that we will reach 0.75 at least at the end of the fiscal.
All right. Thanks much for taking time out and joining in and giving us a view. That's the word coming in from the management of Union Bank, talking about a 10 to 12% advances growth and saying that they will maintain their credit costs. That's Union Bank.
We now have with us the management of Union Bank of India. Manimekhalai, the Managing Director and Chief Executive Officer, joins us. Good morning, Mrs. Manimekhalai. Thank you very much for joining us. Well, first up, the OPEX. I think that is what took everyone's breath away. The huge employee cost. Is the, that 50% rise in OPEX entirely because of this higher wages to employees?
Yeah, Leta, before I just get into that subject, let me just give you a brief on what we have done for the this quarter and the whole year, of course.
No, ma'am, we'll do that. We are going Mrs. Manimekhalai, we are going to do that. In fact, we have thoroughly read out your numbers over Friday. Fine. And therefore, we will take it issue by issue, and I'll give you every opportunity to speak about the big achievements of the bank as well.
Okay. So what we have done is our expenses on, employee expenses have gone up to about 45.67%. That is because we front-loaded our pension provisions to the extent of about almost 1,200 crores. Wage revision of about almost 560 crores is also what we have taken into account already. And that's the reason that it is, seems to be a little bigger. But because I've already done whatever the provisions that I had to make for 5 years, I've already taken for the current year. I will not be incurring that expenses in the next 5 years at least.
Okay, that's extremely positive. But the cost to income ratio rising to almost 50%, 49.5, also is accounted for only by the employee cost?
Yes, that is because of the employee cost alone that we have been able to, we are at this number. For FY23, it's at 46.27. And for the Q4, of course, it is 49.53%. That's a little bit of hike if you compare to Q4 of 2022.
Okay. And now the other, I'm just taking out the problem points and then we'll talk about the growth story. The margins. Yeah. It was expected that as RBI starts raising rates, at some point in time, it will start impacting the banks. But almost all banks have announced increase in margins. Why is it that yours has fallen quarter on quarter by a good 25 basis points?
Now, our net interest margin is, if you look at Q4 FY22, it was 2.75, and Q4 FY23, it is at 2.98. And for FY22, it was 2.94, and as on today, it is at 3.07. The net interest margin is actually not fallen. It's, increased to about 3.07 from 2.94. There is a 13 bips increase in the NIM, actually.
No, I agree. If you look at it year on year and average for a year, your numbers are absolutely correct. But,
Yes.
for a trend, only for margins and NPAs, one tends to look quarter on quarter. And
Okay.
there you did a very good 3.21 in Q3. That it should have fallen so much gives the fear that in the current quarter you will probably report another 10, 20 basis points lower.
Yeah, I'll just tell you that from September onwards, we started increasing the deposit rates, and deposit rates were quite high for the past 2 quarters, and that's the reason that the NIM has actually, if you look at QOQ, it has fallen. But if you look at my MCLR book, it's about 50% of my loan book, and this loan book is, it is getting reset every quarter. So on the due date, it is getting reset. Just about 50% of my loan book has been reset for with MCLR. And what we are observing is during the current quarter, we have got about 40,000 crores of loan to be reset. And the next quarter also, we have got some loans to be reset. So I'm sure that, the NIM will be maintained to at least 3%, that what guidance that we have given.
Sure. Okay, got that. What part of your book is linked to external benchmarks, to EBLR? Nothing at all?
Yeah. Yeah, EBLR is about 40% of my loan book is linked to EBLR, and 50% to MCLR, and the remaining 10% to base rate and the others.
Got it, got it. So you do have some elbow room for lending rates to rise.
Yes.
Okay.
Yes.
Now, if I can also dwell a little bit on slippages. I mean, the overall slippages is not worrying, at an annualized rate of 1.38. But nevertheless, it has been higher than the previous quarter. You have done 2,794 crores in slippages versus 2,567. That becomes a worry. Do you think that will continue?
Yeah, we had fresh slippages to the tune of about 2,687 for this quarter, of course, and previous quarter it was 2,305. And total slippages were to the tune of about 12,000 crores, 12,500 crores. We have seen slippages, but we have seen upgradation also in this. Almost like 4,000 crores, we have seen upgradation in the fresh slippages, which has, of course, added to my total, recovery during the year. Almost 20,142 crores I've been able to recover during the whole year.
Okay, now, ma'am, some of your accounts have gone to NCLT and to that ARC. What kind of recoveries are you penciling in for FY24?
ARC, I have not given anything during the current year, of course, but NARCL we have given, there is about 42 accounts which has to go to the NRCL during the year. They have identified about 42 accounts. Out of that, 24 accounts is where we have a stake, and that is about 10,800 crores. And out of that, as of day 2 accounts have been, already we have seen some resolution and we have got the money. So slowly we are looking at NARCL. And with regard to other accounts, with regard to ARC, we have actually not sold any to the ARC. And during the current year, we have identified certain accounts and we will be looking at the ARC portion also.
No, I meant NARCL. Any recoveries that you can pencil in from NCLT, from all the assets that you are looking for resolution?
Yeah, last year we did 2, and I cannot tell you which one as on date, which accounts we have got. We are not very clear on those things. Maybe in this quarter we should be able to tell which are the other accounts that we will be concentrating on in the NARCL also.
Okay, so your overall comment now, ma'am, on the quarter gone by, and how do you expect FY24 to shape up in terms of growth, deposits, everything?
FY24 we have given a guidance to ourselves to in the deposit growth of about 8 to 10%, advances growth to about 10 to 12% is what we are looking at the advances growth. We are looking at slippages down to about 12,000 crores and recovery to the tune of about 16,000 crores. That is what we are looking at, and we hope that the financial year FY24 would be better than what we have done for the current FY23 also.
All right. We'll leave it at that. Mrs. Manimekhalai, pleasure speaking with you. Thank you very much indeed for joining us.